As entrepreneurs, we all have a reason why we chose to leave our 9 to 5 for an 8 a.m. to 10 p.m. I'm here to capture those stories of why we all hustle and grind for our companies. Matt is a 401k expert, co-owner, and business development officer of Life Inc. Retirement Services. He is a third-generation financial entrepreneur and former financial planner. He sold his practice to become a specialist in the business-to-business space in order to work with businesses to become more successful in their professional lives. So, Matt, thank you so much for being on the show today. I really appreciate you being here.
Yeah, thanks, Andrew. I'm excited to talk to you.
I'm excited to talk to you as well because you're in the financial industry, and it's a very similar industry to what I've been working in for about 7 years with a couple of my clients. So I started my over almost 20 years ago. I started my training career with a major mortgage company as well. So finance has always kind of been something that I've trained, and you have a really specific part of finance that I like, especially for small business owners. So let's have you do this. Go into just a little bit about what is your ninja skill. What do you do specifically?
So yeah, I'm a co-owner of a 401k administration company. And we build custom retirement plans, whether it's a 401k, whether it's a pension plan, defined benefit, profit sharing. We build them custom to the exact business instead of having a boilerplate version that is most people look at and think of when they see 401k. A 401k is a 401k is a 401k. It's not the case. So we build custom to the business owners.
And I think I learned this years ago, but I think a lot of, especially small business owners, people with like a couple of employees, maybe up to 15, 20 employees, they think 401ks are for big companies, and I think or even like somebody who is a one-person deal. Like you hire a whole bunch of 1099s, you're the only actual employee in your company. People don't think, well, I can't get a 401k. Do you want to address that?
Yeah, honestly, that's the exact opposite of what the government wants you to do. They absolutely, with Secure 2.0 that came through in the 11th hour of 2023, they want every business to have something. And they even created a very low level version called a starter 401k at a federal level that if you want to use it, they want to, it's all about the employees. So I tell business owners all the time, the tax code is built for the business owner, but it's also all these regulations around those tax codes are built, like annual testing and a 401k and things like that is built to protect the W-2, so protect your employees. So honestly, the bigger the 401k in my world, the less fun you can have with it. The smaller amount of employees, even if you have all independent contractors, like you mentioned, the 1099, it's just if it's just you can have a blast with your 401k. There's so much you can do, and you can get well into the six digits of contributions. And we have clients that are saving $100,000 a year in taxes just because of the way we design it, to benefit the owner. Excuse me. The concept is, what is it that you need? What is it that you want? We always ask two questions every time we talk to a business owner, whether it's one person or they have one employee or they have 500 employees. It's, why are you talking to me? What are you here for? What is the goal? What is your motivator? And then how much do you want to say? How much is this? How much of this is for you? How much is that you want to stockpile? Or do you need help with taxes? And that's gonna really narrow down to maybe one or two plan design options that we work with. And it's all about the business owner, because the tax code, 401k, and all these other tax codes that are out there are to benefit the business owner. That's exactly what it's for.
Exactly. I think as small businesses, we don't often think about being able to offer a 401k because, again, big companies, that's all they're for. And it's something I really wanted to hit on, especially. And the other one, especially with you kind of hit a little bit on it, but I'd like you to go in a little bit more detail because, again, I don't think many people know these exist, is the solo Ks.
Yeah.
And kind of if you're the only employee, essentially.
Yeah.
Talk a little bit about how those work, what the advantages are, some of the just a little bit more of a deep dive into that so that we can get some clarity on it.
Absolutely. Yeah. So um, a solo 401k is let's take a step back, actually. The IRS code 401k is the same tax code across the board, whether you have one employee, zero employees, just yourself, or you have 500. It's just, how is it built? How is your plan document, your adoption agreement and how's the annual testing done. So a 401k, in that sense, the IRS code is the same IRS code across the board. It's just how much compliance is involved. Let's put it that way. Now, a lot of people think, oh, I have to create this entity. I have to have an LLC. I have to have, or an S corp that I've created this solo entrepreneur business around. But that's actually not the case at all. All you need is self-employed income. That's it. You can mow lawns on the weekends and have a day job. And as long as you are filing and saying you have that income on your tax returns, then you can open up a solo 401k in your name because you're filing as a Schedule C, right? So that's all that matters. So it's a lot easier than you think to open up the 401k, a solo 401k. Now, like I said, there's no employees, so it's just you. You could have 600 employees that are 1099 contractors and are not actually technically employed by your business, and you can still do a solo 401k. And the reality is each one of those 600 employees can have their own solo 401k as well. So they are every time you offer something to an employee who is a W-2, then it turns from a solo into a group.
So just to be clear on it, so if I have, because that's how my business is, I'm the only actual person in it. Everyone I have, my entire team is 1099s, and so I get a lot of savings because of it. But
Yeah.
the thing is, I can get 401ks for them. Is that what you're saying?
They would get a 401k for themselves.
Got it.
Basically,
Okay.
they're the owner of their own self-employed, and if it is an entity,
Got it.
yeah, and it's what's the name of the 401k in? Is it you as a sole proprietor, or is it you as the owner of this business LLC? So as long as it's self-employed, if you pay them directly to their name and it goes into their personal checking account, that's still okay. It's just it needs to be done as a sole proprietor. So it's all about just making sure that they are filing and saying, I have self-employed income.
Interesting. Okay.
Yeah.
Yeah. So now, as far as you're saying, I know you talked about annual testing a bit. I just wanted, that's a term that people might not understand what it is. So I want you to go into a little bit about what that means when you say
Yes.
annual testing and compliance.
So yeah, let's take a step back and say we have a group 401k. We have X amount of employees, doesn't really matter. When inside of a business, employees are broken down between two categories: highly compensated and non-highly compensated employees. So HCE is the terminology. So a highly compensated employee is the owner, 5% or more, your kids or your spouse, or an employee that makes over $155,000. Okay. So annual testing, they don't care about them. They don't care about them. They're worried about the non-highly compensated employees to make sure that you have a fair plan that you've designed for your employees. So the non-highly compensated is everybody else under 5% ownership. They're making less than 155,000. This is for 2024 numbers, and they are not related to the owner. So those are the ones that all that annual testing is protected. So when you do annual testing, it's basically the IRS is saying, have you created a fair 401k or retirement plan for your employees? Yes or no? If the answer is no, then you're going to fail your annual testing. And that doesn't mean you're going to get slapped on the wrist. It just means that the owner, the HCEs, the highly compensated employees, are limited to how much they are able to put in. So, for example, let's say you own a business. Let's say you're an S corp. You're filing as an S corp, and you pay yourself $100,000 salary. Okay, keeping it simple. The annual contributions allowed as an employee is $23,000 that we all know and love inside of a 401k. That's you as an employee contributing through your salary into the 401k. You're allowed to put in $23,000, but if you fail the annual test, you are only allowed to put in approximately 2% over the average employee, non-highly compensated contribution. So if all your non-highly compensated employees that are below the 155, they are not owners, if they are only contributing, let's say an average of 5% out of their own paycheck, you're only allowed to put in about 7. So if you're paying yourself 100,000, that's only $7,000 out of the 23 that you're allowed to put in. If you put anything above that, we're going to write you a check right back at the end of the year. You're just not, there's no penalty. It's just, you're not going to get those deductions if you want them, or you can't put it into the Roth. Now, um, uh, there's a few kinds of 401ks that allow you to automatically pass those tests. It's called a safe harbor 401k. And the safe harbor 401k is basically the IRS says, if you want to use one of these pre-approved matching investing schedules that we have here, here's your menu, choose one of them, and we automatically say, hey, this is a fair plan. Good job. Max out. Do whatever you want. And we don't care what your non-highly compensated employees are doing. We know you've created a fair plan for them. Great job. Go nuts. That's basically all that is. So there's a lot to it, but it's again, IRS code. It's to benefit the owner, but there's a lot of aspects around to protect those W-2 employees that you have.
Exactly. And I think that's one of the things that a lot of business owners have problems with is, like you're saying, there's a lot involved. There's just a lot of anything to do with the government or IRS. There's a ton of detail.
Absolutely. And that's what keeps it kind of, we break it down into two categories as far as the kinds of retirement plans available. You have qualified versus non-qualified. Qualified plans are the ones that you have to play those fairness rules. You have to give your employees something if you want to give it to yourself. And then non-qualified means you can bypass, you can target individuals. You can target yourself as an owner. And those are two different kinds of retirement plans. One is easier to work with than the other, but you also get better tax benefits with the other as well. So follow the rules, you get the tax benefits. If you want to bypass that, there's still a lot of potential in there with the non-qualified. It's just that you don't get those immediate instant gratification tax deductions that a lot of business owners are stuck on. Which doesn't mean long-term that's a good thing. Long-term, we're at the lowest tax bracket ever right now, right? Pre-Reagan, I think the highest marginal tax bracket was 93%. We're nowhere near that right now. So sometimes it's okay to pay your taxes now and protect yourself from future massive distribution taxes when you start taking your required minimum distributions in the future.
Because taxes are totally going to go down in the future, right?
Oh yeah,
Government's not going to take any more. Our unintentional business partner, Uncle Sam, constantly, he's going to ask for more and more.
Yeah, he's always watching.
Exactly. And he always wants a little bit more.
Exactly.
But it's learning how to play the game too. And it's understanding that taxes are a game, 100% a game. I think Learned Hand once said, it was the famous judge said there's two tax systems, one for the informed, one for the uninformed, and both are legal. We know all the rules. Yeah, we know all the rules to it. We know all the tricks and how to use 401ks and how to use the different tools to reduce our tax burden and reduce the amount we have to pay our unintentional business partner. We're good. Yeah,
100%. I love that what you said there, because 401ks, in my opinion, are just scratching the surface on what you can do for we work with a lot of tax planners. We work with a lot of tax attorneys because we feel like, we're talking to these business owners, and step one is the 401k. Obviously, we can do a lot more with defined benefit plans and things like that, but that's still only step one. Sometimes you need to take a step back as a business owner and say, okay, what else do I have? What else can I do? And who else can help me? So a lot of times we'll take a step back and say, okay, what is this business? What else are they doing? What are they offering? So for example, like research and development tax credits, those are highly unused. So if you're creating a product and you're spending a lot of money on improving your product, you can get research and development tax credits. We came across a client who had hundreds of thousands of dollars a year that they're missing out on tax credits every single year. So that's just one. And then cost segregation, like you guys talk about quite a bit. And there's so many little details that, okay, yeah, we want the deduction this year. We need the instant gratification, but not always a pre-tax contribution to your 401k makes sense. Let's find another way to get that instant gratification through other kinds of tax credits and deductions and things like that. So there's so much more to it than just let's contribute to a 401k.
Exactly. So Now, I always like to give some context about what you do and give some, benefit. And I think this is a subject that isn't talked about very often. And I like those subjects that aren't talked about very often where we can get different benefits, like, the Augusta rule. I can rent out my house to myself for 14 days a year, tax free. The things that I bought a Jeep and I asked how big is, what's the gross weight on it? And they said 5,500 pounds. And like, can we get two fat guys sit in the back seat to get it over 6,000 so I can take my deduction on,
Couldn't weigh
we don't
it. Couldn't
know,
weigh it.
as business owners, we don't understand how to do all of this. So I wanted to make sure that we touched on that, and that 401ks are not just for, big corporations. They're
Yeah.
also for like they're independent contractors, freelancers. There's a lot of different things out there. But what I also really love to hear in this podcast is, how did you get into this? Because there's got to be a
Oh, yeah.
story behind how you got into 401ks and financial planning and that sort of thing.
Yeah, I've been doing this for I've been in the financial industry for I'm going to say, we'll just say 20 years. I don't know. Maybe a little bit longer. Um, so I'm a third generation financial professional. My grandpa, my father did it. I started working through an insurance company. Then I built up through a different, the banking channel and doing the investments and through there. And then I ended up owning my own financial planning practice. And I was in Southwest Florida at the time, and I did not. When you're in Southwest Florida, the people you work with are retirees. And I did not want to work with retirees. I was younger. I wanted to work with my peers, and I'm an entrepreneur at heart. I mean, I absolutely love entrepreneurship. And like I'm going to read more books about entrepreneurship than I am about personal finance because I've been in this 20 years. I know that stuff. Now let's talk about growing a business. And so I said, I don't like what I'm doing. So I ended up selling that. And I didn't want to be a generalist. I always feel like a financial planner, financial advisor, those are the generalists. Those are the ones who are the quarterback. And then they need to pivot and shoot them off to the tax planner, the specialist, right? So I wanted to be a specialist and work with, because you talk about superpower. My personal superpower that I've found over these 20 years is I like connecting and talking with people. That's why I like to be on podcasts. And that I like to create centers of influence and partnerships. So I wanted to sit on the same side of the table as the financial planner or the CPA or the attorney because I have the specialty that they need me to work through. So I ended up selling my financial planning practice, merged with Life Inc. Retirement Services. I'm now co-owner of this company, and we are scaling it. And so the biggest part of it is I wanted to be a specialist to where I can sit on the same side of the table as all the other financial professionals and work together to help business owners specifically is where I wanted to focus my time on.
So I want to dig a little bit more about kind of, so you said, and I completely understand about, Southern Florida being mostly retirees. And at that point, it's
Yes.
really fun.
Yeah.
It's just like, you've already made your money. We have an X amount to work with. We can't really do anything super creative with it. I
Yes.
completely understand that part, but it sounds like you kind of did this once around, kind of came around back to retirement when you're talking about 401ks. So it kind of sounds like
No,
this big
isn't that
ring.
funny? Yeah, absolutely. Yeah, it's different. It feels different though. So we're not financial planners. We're not focusing on the big picture. Now we refer out financial planners. So it was the to me it was I just wanted to work with business owners because every single client is completely different than the next. Well, versus if you're working with a retiree, I felt very much like every client it was very mundane and it was the same client over and over again. It's just a different name, different address, and that's it. And a lot of the other part of it is this was, over 10 years ago. And, pre-COVID, I would say that it was still very much a knee to knee, face to face local bit industry for the most part, I would say, and I did not want to work just local. I wanted to be able to expand nationally. And doing financial planning was much difficult. What a one-to-one on business to B2C was much more difficult. And I wanted to work more, again, like I said, B2B. And it's a much more scalable business model doing it that way too. So times have changed a lot of almost 90 5% of our clients are virtual now. So it definitely has changed just because times have changed. But yeah, it's definitely, I guess you could say full circle, but now more focus on the business owner instead of the individual retiree.
And I think it's really interesting you bring that up because I think we are becoming a very virtual society, and I think that's for everyone's benefit because trying to find somebody that specializes in 401ks for small businesses and this would be difficult in a specific geographic area. It's much easier now. I can go to somebody outside of Buffalo, New York, where I'm from. I can go to somebody outside of that and find a true expert who only does one specific thing. Going back to something you said earlier, where you said I don't want to be a generalist. I think specialists are very good people to go to because they do one thing and they do that one thing very well. It's a quote
Yes.
from Orville Redenbacher. He says, "I do one thing and I do one thing very well." And that's it. And
100%.
I think you get a much better service for it. Yeah.
Absolutely. And whether it's a niche or the actual service, we work with a lot of financial planners. Some of them specialize in very, very specific, and that's the deepest part of their knowledge. And the vertical knowledge versus the horizontal knowledge. And you can go out and find anyone you need to work with, as long as you're okay working virtually, which is so much easier these days.
Yeah, it takes a different skill set. If you're used to managing people in person, managing them virtually is a different skill set. But as soon as you learn that skill set, once you learn how to do it properly, it's something that's relatively straightforward. It's not hard to do.
100%, 100%. It was a huge, very uncomfortable feeling going from face to face to virtual because you don't have that same, there's just a little, it's like your stabilizer muscles when you're working. It's the stuff that you don't realize, but you are working on it. And then just recently I had a lunch with somebody face to face. I was like, oh my gosh, I gotta remember how to ride a bike for a second. And it was very, very, it was slightly uncomfortable, but I got back, took off the training pretty easily.
It
So
is it is like riding a bike. You eventually will get used to it.
yes,
That's why like all of my meetings I do Zoom. I very rarely will do a phone meeting because I like that
yes,
connection. So it's just for me, it's a thing. So that helps a
agreed.
lot. Yeah, yeah. I almost all 20 years of my career I've done virtual training remotely, and I've worked almost from home for most of that. And so it's one of those things where I just sort of it's a different world for me. It's like meeting face to face is a little bit different. I love face to face,
Yes,
but it's a little bit of a different skill set. So I think I've seen the
100%.
other end
It's
of it too.
completely different.
Yeah, yeah, yeah.
Yeah, it's different. And I was just in, it was funny. I was more uncomfortable in the beginning when everything did go virtual.
Mhm.
I was like, I'd rather do a phone call than on a Zoom call. Because like, what do you do with your hands? It's like, what do you do?
I
You
don't know
know
what to
what
do with my hands.
I mean? So yeah, but now I'd rather do Zoom, and so it just takes time, patience, right?
Exactly. I could wear shorts. You don't know if I'm wearing shorts, and
Right,
it's so you
exactly.
don't know what's going on. It's great. As long as I call it freelancer professional. It's like from the waist up, you look professional. From the waist down, is anything going?
The business model. That's
It's
right.
great. It's great. So we were talking a little bit in the green room about some of the cool stuff you can do with 401ks and specifically self-directing. I think it's something that people think of when they think self-directing. They think either I have a choice of one of these four plans that somebody else has chosen for me, or if I have a 401k, I just put my money into this thing. I have no idea how much money I'm making in it. I have no idea how much the fees are. It's this black hole that I hope is going to help me, go through retirement. And I've heard a lot of people who don't like 401ks say this, that this is just a black hole. It's going to cost you more money. You're not keeping up with inflation, a whole bunch of other things. Address some of the cool stuff you can do with 401ks, especially for like smaller companies, like freelancers,
Yeah.
solopreneurs, things like that. What's some of the cool stuff you can do?
Yeah, and it's funny because I am very much on that. I work in the 401k business, but I also have that same mindset. I love the real estate world. I like the I'm a rich dad, poor dad kind of mindset, right? Business producing assets. I'm not all about like, hey, let's just have this big bucket of money in retirement and hope it sticks around when you retire. It's using the 401k as a tool to be able to do these things. And I said the 401k tax code is a 401k is 401k tax code. But from a plan design in your plan document, a 401k is not always built the same. It has to do with your plan document or adoption agreement. It's called prototype versus non-prototype. What are you able to do? Is it plug and play or is it designed for you? Like that custom part of it that I mentioned earlier. And we start with those two questions, and the third question that goes a little beyond is what's your investment philosophy? What do you like to invest in? What do you like to do? And we've had clients say, I don't want to put my money in a 401k. I want to do like the rich dad poor. I want to grow my business. I want to buy more businesses. I want to get into commercial development, things like that. And then we are completely independent. You just have to find a custodian or the route to do it. There's three roles to every single 401k plan. One is the administrator, who's doing all the compliance, okay, who creating the plan document, who's acting as the investment fiduciary, so who's making those decisions and who's taking that liability of choosing those investments. And the third is the custodian or the record keeper, which sometimes is simply just a bank account to house the real estate inside of your 401k, right? So we are always the administrator. Sometimes we're the investment fiduciary because the employee pool isn't as maybe investment minded and they need some support. So we act as the fiduciary in that. But a lot of times the business owner is going to say, I don't want any of that. The only reason I'm opening up a 401k is because my state is telling me now I have a mandate, or my employees are kicking me saying I need to have a 401k plan, or you're trying to compete with your competitors for your employees. Like, we're all going after clients, but you're also going after a good employee. So how do you bring them in, which is a big part of the just entrepreneurship, is trying to have high quality recruiting and retaining high quality employees. So if we need to build a self-directed portion for the owner, where you can put real estate inside of it. We partner with banks to where you can put real estate inside of your plan, or you want to do just stocks, bonds, cryptocurrency, whatever you want inside of there. It's all about the custodian, or they're also known as the record keeper. So if you go with Fidelity or Schwab, which is a pretty traditional custodian, you're very limited to what you can do inside it. You can't do non-traditional investments like real estate inside of there. But if we extend that out and use a self-directed bank, then we can add those into it. So it's all, those are I always say there's two questions. There's actually a third, and that's all at the end of the day. It's like, okay, plan design, which one? Those are the first two questions. The third is, now what do we put the money in? That's the flow of the conversation. And that's the same flow we have with every single client. But if there's no employees, we know the answer to the first one. The first question is, why are you here? Because you want a 401k for yourself, or tax benefits of the 401k. Now let's leverage that and invest in it.
Mm-hmm. And I wanted to bring forward that there's some more questions to ask other than, I need a 401k here, let me plug this in. There's some more things you can do with it. It's something that you can get creative with, and not with maybe some of the larger corporations, but with smaller boutique firms like you, like specialists, might be something interesting to think about. So I want people to start thinking about that, especially when it comes to retirement and some of these more traditional vehicles that we think of when we go to a job. Not something we think about as entrepreneurs. We like getting really creative. So I wanted to ask about that and just kind of make sure that we covered that while we're here.
Absolutely. Yeah, that's a great question. Absolutely.
So I do have one question. We're getting towards the end of things. I do have one question I wanted to ask, and I ask this of all of my guests. And would you be able to recommend one book or podcast that has had a significant impact on your life?
Yeah, absolutely. So The Alchemist, if you've heard of The Alchemist. How many people have said The Alchemist on your show?
None yet.
None. Oh my gosh. It has nothing to do with finance.
No, not at all.
No, it's the reason I love that book. And it's all about like the journey, the journey you go through. And entrepreneurship there's a journey and some checks and balances and pivoting and all these things. So I like it because and first of all, the audiobook is great. I think it's Jeremy Irons is the one who reads it to you, which is awesome.
Oh, I read the book, so it's just like, I'll have to get that.
Listen to it. It's even better. But yeah, so it's, about the journey and like, you might feel like in the moment it's a failure, but when you look back, you needed those skills that you use to make to those failures to get to the next step to take that. So it's like taking 1 or 2 steps back to take 5 leaps forward kind of situation. So it's just like, and it's done in a very neat way through a story instead of just a talking head through pages. I love it. Absolutely love it.
Interesting. Yeah, there's a few books that are much, much better as the audiobook. I think David Goggins' Can't Hurt Me. Great book to listen to the audiobook. I mean, it's a good book in general, but just the audiobook has a whole nother level. He's a podcast in the middle of it. So, but sometimes it's better to listen.
Okay. Okay, I gotta look at that one too now. But
Absolutely
yeah,
do it. Yeah. No, so at the end of the his ghostwriter reads it, and at the end of each chapter, his ghostwriter and him have a podcast episode, like
okay.
talking about what they talked about in each chapter. So much better in the audiobook.
Interesting. What a neat way to do that. Okay, I gotta
It
listen
was
to that.
really cool. Yeah, exactly. So I'm glad I'm with all of the love in the world. I'm really happy his ghostwriter was the one that wrote it because I don't know if I could listen to David Goggins for like 6 hours of his book, but at least that little podcast is always interesting because the content is so good. But
That's good. Sometimes you can write, but you can't say very well. That's good.
it's all yeah. So well, Matt, thank you so much for being on the podcast today. I've had a great time talking to you. I really appreciate you being here.
Thanks, Andrew.
Thanks. Thanks again for joining us on the Hustle and Grind podcast. If you'd like to learn more about Matt, check out the link in the description.